but what we can expect today, Stan Shamu joins us from IG in Melbourne. Stan, great to see you there. Let's start with the Aussie dollar because it should be a big day for our local currency with job numbers set to be released. What are you looking for?
Yeah, it certainly is a big day for the Aussie dollar. Of course, it's been one of the better performers in the risk space this week. It's still managed to hold a very good range between around 105.55 and about 106. Of course, we'll be eyeing the top and bottom, the bottom and the top end of these ranges today ahead of that jobs number. And at the moment, it seems to be holding up pretty well at around 1057. Of course, yesterday we printed that high of 1058, and I think that's really the level to watch in the near term. If we do get a bit of a better than expected print on the jobs front, at the moment, of course, we are expecting unemployment to tick higher to 5.4% from 5.2%, whilst jobs added are expected to come in at 2,300. Now, the Aussie sort of employment numbers have been a bit misleading on the consensus front over the past few months, so to speak, especially last year when everyone was expecting to see the cracks in the jobs market start to show, and the jobs numbers just continued to show strength after strength. I suppose at the moment the question really is, have the recent restructures that we've been hearing from a lot of these mining services, mining and industrials companies are going to start feeding through to these figures and start really showing exactly what state the economy is in, or is it going to be another situation where we're all surprised to the upside when all the news is quite negative around the jobs front. So as a result, it's really hard to call at the moment, but should we see a better than expected print on the unemployment and jobs added front, we could expect to see the Aussie dollar test that 1058 from yesterday, and this might open it up for a move back to 106 where we were not too long ago. On the downside, of course, if we do see the numbers come in at a big miss on the expectations front, then we could easily test that 1052 level, which was the top end of the recent range the Aussie dollar was in. So yeah, there's definitely a lot of scope for a big move. For the local currency. Something else to contend with, obviously those World Bank comments on the global growth, just that tends to be negative for commodities and obviously commodity related currencies. So this might be another issue to look out for today as well.
Okay, what about the local market? We saw a bit of a mixed picture in terms of commodity prices overnight. Iron ore dropping back to about 145. SPI futures at the moment are telling us we'll start in the black. What do you think?
Yeah, it's a tricky one for the Aussie market. Of course, yesterday it was a big outperformer in the region. We saw big drops in the Nikkei, for example, whilst the Aussie market actually managed to tick higher. So it really is a bit of a tough one. But we suspect yesterday's gains were mainly a result of investors starting to chase yield and some of those defensive names again ahead of what seems to be a very sort of cautious month for a lot of investors with a lot of issues to contend with. Of course, we continue hearing on the global front that is problems with the debt ceiling negotiations, and as well just European growth concerns and global growth concerns just starting to hamper the rest of the risk space. So I think this is why we managed to outperform yesterday as people chased that yield play through the banks and obviously other defensives as well. I mean, we saw a pretty good day for the healthcare space, especially stocks like CSL. But as it stands, we are calling the market higher, up a touch, just about 0.2% to around that 43, 47 level. Now this leaves us firmly in sights with that 47.50 level, which is the high from January 7. Now this level will probably be the key level to watch. We might start seeing some selling kick in at that level, and particularly with not such a great day tipped for the resource names, it is possible that we could see a fairly big pullback as soon as we test that level. Of course, we've got BHP looking like it'll open down around 10 cents to around 36.15. This is on the back of another pullback in iron ore to around that 145 level. So it's really going to be a struggle for some of the resource names. We also have quite a few reports from the likes of Woodside, Santos and Iluka. So these are generally production reports at this time, but we'll probably still hear some commentary in regards to cost blowouts for some of these gas players. At the same time, Iluka has been one of the was one of the darlings of the market a few years ago. Now it seems like this mineral sands market is just dwindling with a lot of downgrades by several brokers on the price front going ahead. So yeah, there's definitely quite a bit going on in the resource space. Of course, yesterday we had that update from Boral announcing a bit of a restructure. The market seems to have liked it. Yesterday their stocks were up massively. Today they received an upgrade to a buy from hold by Deutsche Bank with a 550 price target. So this will probably gain traction, and we'll probably hear further comments from the other brokers. At the same time, the banks and the investment banks will probably get a bit of a kicker from the JP Morgan and Goldman Sachs results, which were quite positive as well. So there's definitely a lot to look out for. Elsewhere in the region, of course, Japan and the yen will definitely be on the radar. Of course, yesterday we saw a big drop again in the dollar yen. There have been a lot of reasons pinned for this, but I think it's just one of those situations where the BOJ meeting's coming up. There's been a lot of talk ahead of it. We've seen a big rally in the dollar yen and the Nikkei, so some traders just starting to feel, let's take some profits off the table just in case they don't really impress in a big way as expected next week. It's better to just exercise some caution and have something locked in ahead of that. So yeah, there's a little bit to go by, but yeah, absolutely the jobs numbers will be the key event of the day, and we'll have to see how these go and how they impact the rest of the market and the rest of the session.
Yeah, comprehensive wrap. Stan Shamu, thank you so much. Well, holiday shopping, strong auto sales and a recovering housing market